Your free cash flow is basically your leftover after all of your obligations and expenses. The reason why it's really called free cash flow is because it's money that you're free to do whatever you want with. And to an investor, this makes your company look very, very good. It makes your company look very healthy. Hello, and welcome to Small Biz Catalyst. My name is Ayisat Abilagan, and I am your host. I'm an Economic Recovery Corps Fellow and the CEO of Financial Leadership Club of America. This show is for struggling small business owners who want to be able to earn a consistent six-figure salaries from their businesses, and the economic development professionals who support them. Every week, we will delve into innovative strategies, success stories, and actionable insights to empower small businesses as catalysts for economic resilience. We will bring in knowledgeable guests who can help small business owners grow their businesses. Whether you're interested in community development, economic policy, or entrepreneurship, this podcast offers valuable insights and inspiration. I look forward to having you on future episodes. Hello everyone, and welcome to another episode of Small Biz Catalyst. Today we're actually doing something different. We're digging deeper into our finances. At the end of this episode, you will know what a cash flow is, what a cash flow statement is, how it's calculated, and the different types of cash flow. I might even share a sample cash flow statement. Recently, I was traveling back home, and as usual, as some of the times, I decided to take an Uber or a Lyft to the airport. Well, this day, although I was really, really tired, I was lucky that I got a talker for my driver. And so, of course, small talks, and then she started to share about herself and what she did and different things. And she shared during the course, I love my Uber and Lyft drivers. They are awesome because I always learn something from them, either something about the location, geography, or different things, or just, life. And so she had shared that she actually went to school at some point for psychology. And then she said, well, sometimes I diagnose my clients, the people she drives back and forth, consult with her, so free consultation. And so she would tell them, they would share their story or their life or whatever was going on. And, she would give them advice during their ride. And I thought it was really, really interesting that, that you would come across somebody driving you somewhere, maybe to work, an appointment or anything, or home or wherever you may be going. And then you, of course, consult with them for whatever you're going through. Now, this might be, once in a while hit or something. But for most of us, if we really needed to see a specialist, we wouldn't wait and hope that we get a Uber driver who would specialize in whatever we needed. We would take the time to research, find the right person, and then make an appointment and take care of whatever that might be. And so today, as we delve into the cash flow, I want us to really just take this lesson to our business. We don't need to wait till we randomly bump into the help we need. As business owners, we really need to be proactive in understanding how our business functions, especially around the matter of cash. Of course, as you know, the saying goes, cash is king. So in the business, cash is king. The cash flow statement itself is really one of the three financial statements that most companies need to produce regularly in order to show and understand where their business might be. In the case of the cash flow statement, it actually ties your balance sheet, which we're not addressing today, to your income statement, which we're also not addressing today, but we'll address it on another episode. So cash flow is really easy. Just think about how money moves in your company, particularly cash, just cash. And this really is, a cash flow really just tells you total amount of money that came in minus the total amount of money that came out. So accounting, or generally people would say, what's your net cash flow? And literally they just mean, what's the total amount of cash intake minus the total amount of cash outflow? What you received minus what went out, cash only. Not any other form of cash, but just cash. Not gold, not whatever else, not notes, nothing, just cash. Okay, so the cash flow itself really acts like your business. I don't want to use like your business book, in the sense that we use it to reconcile your balance sheet and your income statement. Now, a cash flow statement is produced periodically. That might be monthly or yearly, preferably monthly, and then of course you have an annual one. If you're going to borrow money for your business, your banker wants to see this, or whoever else is helping you financing your business, whether that's somebody who's investing in it or somebody who's loaning you money. They want to see what you're doing with your cash, how much is coming in, how much is coming out, and it actually helps calculate a lot of so many other things. So your cash flow statement actually has 3 sections. It has cash flow from operations, cash flow from investing, and cash flows from financing. Those are the 3 segments, and I'm going to dig deeper into each segment. Your cash flow from operations deals completely and solely only with money that's directly related to the production of your goods or services. So really related to the core of your business. Cash flow from operating activities would include things like money that you receive from your customers. It will also include money that you use to pay for merchandise. That's everything that you sold. So wages, like if you paid salaries directly related to the production of the goods or service, that's counted as part of your operating cash flow. If you paid taxes directly for the things that you buy to use for your business, that's operating activity. All of that ties into cash flow in or out of your operating activities. Now, we also talked about cash flow from investing activities. Now, you might say, well, maybe my business is not into investments and things like that. Hear me out. So when it comes to investing activities, we're talking about things like capital assets, like if you bought a building or you leasing a space in order to do business, that counts as your investing, or even your equipment. If you're buying an equipment or leasing equipment to produce what you're selling, that counts as part of your investing activities. Those are things that are not directly related to what you're selling or the core of your business, but they're needed to produce, or, the investments that are needed to produce the things that you would sell. For instance, if you paid to acquire another business, that's an investment. If you paid for an equipment, that's an investment. If you sold maybe even a used equipment that you're not using anymore, that is cash outflow from investing activities, because that equipment is part of the investing section of your cash flow statement. Hey there, if you're just joining us, this is Small Biz Catalyst. We would like to invite you into Tag a Business Team. Here's what you need to do. Nominate a small business of your choice. Tag them on our website at smallbizcatalyst.org. That's small, BIZCATALYST.org. Tell us your name, give us your email address, because that's how we'll be able to tell you if you're a winner or not. And then give us a website to a business of your choice. It could be your business or somebody else's. Once you've tagged a business, you'll be entered for a $25 drawing to a local business of your choice. We'll announce winners every month. And now, back to the show. Now, the third part is the cash flow from financing activities. Cash flow from financing is basically any cash that relates to the funding of your company and its capital. This could be any activity that includes debt or equity or paying of dividends. Cash flow from financing really gives an investor an insight into your company's financial strength. It also lets an investor know how your capital is structured. Are you taking in more loan or do you have more equity in your business? Now that we've talked about the three aspects of a cash flow statement, I'm going to share a few other terminologies that are related to this cash flow with you. One of them is free cash flow. What does that mean? It shows how much money your company has left over to expand the business or even pay dividends to the investors. What do I mean? So basically, remember how I talked to you about free cash flow? It's the money left over after your company pays its operating expenses and its capital expenditures. Your free cash flow is basically your leftover after all of your obligations and expenses. And so, because the reason why it's really called free cash flow is because it's money that you're free to do whatever you want with. And to an investor, this makes your company look very, very good. It makes your company look very healthy financially. Now you might say, well, I don't manufacture anything and, I only consult and I make all this money. Does this really matter for me? Yes, it does. Because even though you may not be manufacturing anything, whatever consultation you're providing, there are things in your business, there are expenses that are related to it. Maybe you're spending your time, you're giving advice in a particular industry, and of course you're getting paid for that. Perhaps there are preparation that needs to go into that. Maybe you're paying for coaching or you're buying supplies. You need to buy your computer, things that you're buying in order to make sure that your business functions well. Maybe you're buying apps or softwares that you're using to help your business run smoothly. All of this involve you spending money and receiving money. And so all of that cash is important for your business. Perhaps maybe you have to even raise some capital in order for you to get started so that you could invest in certain things, maybe invest in yourself or invest in your staff. All of those things take cash. You're paying taxes for the people that you hire, you're paying, salaries and different things. Those all relate to your business. And so it's important, even if you're not, manufacturing a product per se, for you to have a cash flow statement. It gives you a better view of what's really coming in and what's going out of my business. And which brings me to my next point. Is my revenue the same as my cash flow? No. There are two different things. Your revenue represents the money that you get from sales of your products or services. The cash flow represents every amount of money that comes into your business or goes out of your business, either as a result of operating your business, investing in your business, or financing your business. So there are two different things. In episode 2, we talked about the importance of your business financial standing and how important it is for you to grow revenue in your business. I hope at the end of this episode, you've been able to understand that this one financial statement really is critical to help you see how your business is doing cash-wise. Where are you? What are you spending money on? And where are you getting money from? And how does that make your overall company look? So for a moment, I'm going to share my screen and review a sample statement. Here's an example of a cash flow statement for those of you who were able to view this on video. It's divided into 3 sections, just like I mentioned. Cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Notice under the operating activities, they've got cash receipts from customers, cash paid for merchandise, cash paid for wages and other operating expenses, cash paid for interest, and cash paid for taxes. And then there's an other section. And each section has its own mini total, like subtotal. So you see all the numbers here subtotaled into this. And then they go into the investing activities. Under investing activities, you'll notice cash received from sale of a capital asset, plant and equipment, cash received from disposition of a business segment, cash received from collections of notes receivables, cash paid for purchase of capital assets, and cash paid to acquire business. All of this fall under the investing activities, and it's got its own subtotal as well. And then the third segment, I won't call it the last, but the third segment is the cash flow from financing activities. Notice how that includes cash received from issuing stock, cash received from long-term borrowing, cash paid to repurchase stock, cash paid to retire long-term debt, cash paid for dividends and other. And then it's got its own little subtotal. Now, each of these segments, the subtotal from each segment is now tallied as net cash provided or used as increase or decrease in cash during the period. In this case, their cash increased this period from all of their cash activities. And then it shows you the balance at the beginning of the period and the balance at the end of this period once they've added increase from this period. This is a simple statement. This is a very simple cash flow statement, but it kind of hopefully it gives you just an insight into this. Now you may say, well, I don't do the accounting in my company. I don't really care about what happens. But as a business owner, your business is your responsibility, and you don't have to be an expert in every segment, but it's good for you to be aware of where is your cash coming from and where is it going. Because here's the thing, people who are investing in your company are interested in this. Banks and other organizations that you borrow money from are also interested. So you want to make sure that at least you have an understanding of your cash and how healthy it is. See you next time. I hope this episode has really been beneficial or insightful as you run your business or as you desire to grow your business. Thank you for joining me, and see you next time.